Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 6th of June. The information covered in this evening's recording is general advice only. Investor Signals provides a personal investor account, which is a brokerage account established in your name. We provide a variety of different strategies. If you'd like to know more about the personal investor account, please contact me on 1300 614 002. We have been a public webinar this evening. We have a number of clients joining us that are not currently subscribers or members. So just as a reminder, there's 3 different products that Investor Signals provides. Our research, which is a subscription service, which is largely the technology that I'll be presenting this evening. A brokerage account, as I mentioned, a brokerage account established in your name where I act as the advisor and make the investment allocations for you and advise on the strategy. Or if you'd like a set and forget type approach, we also have a managed fund, and you'll find more information about those services on our website. Or again, don't hesitate to give me a call to discuss further any questions you may have. Alright, starting this evening, as a backdrop, let's look at the S&P 500, obviously the top 500 companies in America. Is the index fair value or not, as a base question. I always reference the earnings of the S&P 500, obviously also being mindful of where interest rates are at. For the large part, the market's already priced in a series of interest rate increases, and we're likely to get a gradual increase in rates that align with at the most sort of where the market's repricing interest rates. So I don't think there's any surprises on the horizon on the interest rate front. We're probably more likely to see a slight cooling of the economy and an adjustment in rates higher, but a stabilisation in the coming months as to how high those rate expectations are likely to go. So it really comes down to an earnings picture. What do the earnings look like? And I think we are looking at a slightly slower economy, and with that what we've seen is the average earnings expectations for the S&P 500 come back from around $220 back down to around these levels here. So if we look at the earnings for the March quarter and assume that the June quarter is similar or even just a little bit lower, then we get to a point where the market's at fair value where it is at the moment. As we come out of the earnings result season and corporations start buying back shares again, interest rates pause, we could be setting up for an environment right at the moment where the market could possibly rally 5 to 8%. Now that's a big call. It's obviously hard to just predict the market over coming days or weeks, but the conditions are there that could set up a bit of a relief rally in the market. And part of tonight's recording will be to go through the ASX top 50 stocks and identify which names you want to be focusing on closely for both trading opportunities and for investment opportunities as well. So that's the backdrop we're dealing with, always being mindful of a reversal in events. At what point does that sort of optimistic outlook change? Well, for me it would really be if the market was to break down below that 3,800 level on the S&P 500, so to be precise 3,810 there. So let's have a look at what I've put on the blog over the last week, and I'll discuss what's gone on the blog there. So I just need to skip forward here and bring it up to the current posts. Just bear with me as I do this. So there we are there. So that's so from from today's blog post there on the 6th of June. So what I've done here is click on the news section. This is our research blog, so as a member, these are all now restricted, so it's only members that have access to these. Every day at 11 o'clock there's a post of what our algorithm engine's triggering, along with commentary provided by myself as to a combination of both trading and investing opportunities that we're focusing on. So one of the recent opportunities has been Woodside Energy, and originally started drawing clients' attention to this with a buy recommendation here at $29. If we backtrack further, you can see the red circle there highlights where the algorithm engine switched from sell conditions into buy. So for longer term investors, this was added into the top 50 portfolio, and we'll have a look at that shortly. But if you've missed that, even from a shorter term trading standpoint, I was just highlighting here that this $29 support level should hold, and we should get a rally higher in Woodside. That's transpired. We've since seen Woodside rally around 10% from then. And just highlighting that the price target there sits between $34 and $36 there. Star Entertainment, this hasn't rallied as yet, so you could make a note of this on your notepad. You need to watch this closely. It's certainly a higher risk proposition. The thinking here with Star is that the worst of the trading results are probably in the rear vision mirror. We're looking for a slight improvement in earnings as the numbers come through for the June period. The catalyst here is to simply watch these short-term indicators, wait for the price action to trade above that moving average, wait for those shorter-term momentum indicators to turn higher, and as a subscriber to the technology, I'll continue to draw your attention to my analysis on that. PEXA Group, again, slightly higher risk. This is a technology proposition, but technology's been hit hard in the sell-off over the last 6 months, and PEXA hasn't been spared. Like many of the technology companies, trades on a high PE ratio, but it's quite unique technology that PEXA offer. They're expanding from Australia into the UK, and I think that's a catalyst for potentially a bigger company to either take them out or just to see a string of earnings upgrades as they continue to roll out that technology, or they start to roll out the technology in the UK and throughout Europe. The S&P 500, I think I covered that earlier, but worth just tracking the highlight here. So ideally what we would see is sort of a first test, first fail, which is a pattern that I'll refer to, and as a subscriber you'll learn more about. But it was a bullish support. We're looking for a higher low formation there, and again I'll continue to update you on that as it evolves. REA Group getting oversold down here at around the $100. Wesfarmers oversold. The divisions of Westpac of Wesfarmers across Bunnings, Kmart, their one digital strategy, and obviously their recent acquisition of API in pharmaceuticals. I think Wesfarmers well positioned. You're buying it at a fair price down here. The dividend yield's almost 4%, and the correction that we've seen from 65 down to 47 makes Wesfarmers attractive. So now I'm just moving back through the articles, going back to the last recording, so just revisiting the last 7 days here. Newcrest, on the blog I was just drawing to your attention that Newcrest is now under buy conditions, and that's been added into the model portfolio. Incitec Pivot, you might want to make a note of that one on your notepad. IPL's been under buy conditions for quite some time, and it's one of the better performing stocks from in our ASX 100 model. It sits outside the top 50, but you'd find it in the ASX 100 model. So originally it was added on that green buy signal there. It's had another subsequent signal here, and at around this 350 level I was just drawing your attention to the fact that that 350 support level is likely to hold. We've introduced cryptocurrencies just from a request from our customers, so we've integrated that. There's watch lists and model portfolios for cryptos that you can review. For the most part, cryptos are very closely tied to the Nasdaq. The sell-off in the Nasdaq's had a big impact, among other reasons, on cryptos, and it'll be interesting to see as the Nasdaq rebounds, do we get a rebound in some of these coins? So if you have an interest in crypto, again, on your trial, give me a call. I can guide you through the features and the tools that have been added there. From a Bitcoin standpoint, the focus here is simply above this 30,590 is a breakout, and there might be a risk on opportunity there with the appropriate stop losses needed in place. Woodside Energy, we covered that. And then Crypto Weekly, so each week I do a 5 to 8 minute review of the crypto market, so you may find that of interest. Moving back through the articles a little bit further, and there we are back to last week's webinar. So as a member or a subscriber to the technology, instead of only having access to these public webinars once a month or once every 6 or 8 weeks, as a subscriber you're getting access to our Monday strategy recordings, as well as that daily blog, and I'll talk more about how to set up that free trial so you can access and review some of the new features in the technology. And part of next week's recording for our members, I'll spend time talking about some of the new tools that we've added in here around the pivot table and new developments with the trade table technology as well. Okay, so starting this evening from the ASX 50, and that's going to be the focus. This is the most popular of our model portfolios that clients track. So again, allowing for the fact we've got people joining for the first time this evening, what I've done here is click on model portfolio. From the drop down list I've selected ASX 50. You can see there's a variety of models that you could choose to follow or look at, but tonight we'll be focusing on the ASX 50. A couple of different ways to view this. So days held, so this gets the least number of days to the top, so days held 10 here. So the stock that was most recently added into the top 50 model portfolio is Endeavour Group, and then following that we had Newcrest, which was added into the portfolio 26 days ago. BlueScope. So as I go through the charts this evening, I'll comment on the stocks that have recently been added to the portfolio. And another way of viewing this is if we look at the percentage performance of the stock, which is the percentage gain since the first buy signal. So something like Computershares done very well, up 102%, been in the portfolio for 623 days. On the other end of the scale, you've got a couple of these technology companies that have underperformed or are below the original entry signal, and that'll be part of what I cover this evening. So with that, let's click on the watch list here. From the drop down, I select ASX 50. And with the sell-off that we've had in the market, what I would like to do is start the review of the top 50 by talking about the stocks that are under sell conditions and therefore are not in the model portfolio, and just give you my thoughts on which ones that are likely to shift to buy conditions in the near future. And then obviously we'll focus for the most part on the stocks that are in the model portfolio and identify for you the opportunities for you to focus on. So the way I do this is I get the worst performing stock to the top. I come across here to the signals. So what we're looking at is the worst performing stock under sell signal. I'm going to go through these and I'll get part of the way through, and then I'll highlight to you that we've shifted from stocks that are under sell conditions to stocks that are under buy. And then I'll share with you some more detailed analysis on those ones that are under buy. But hopefully you find it of interest. The sell side signals here as well, which is an important part of managing a portfolio. It's obviously not just about buying stocks. It's about having a disciplined framework to lock in your gains and get capture sort of the if the momentum starts to falter, that there's a discipline in place to get out of the stock. So let's have a look at these. So Seek is under sell conditions, and a reference there is that the most recent signal is an algorithm sell signal, which is the red box. So if you are a subscriber and you have access to the technology, you would be turning on Show Leon's charts, which will mean you'll see the same trend lines and annotations on your charts as I draw in real time, and you'll notice that the stocks that are under sell conditions, I have resistance lines in place, and then the stocks that are under buy, I'll have support line. So Seeka's a great company, but got a little expensive there, high PE ratio, and we've gradually seen it roll over from an uptrend into a downtrend, lower lows, lower highs, and you can see there the algorithms flagged that, and the stock's moving lower. I suspect that Seek's probably heading down to around this sort of $22 level there as support, but we're not doing anything there on the buy side at the moment. Transurban under sell signals, bumping up against resistance at around that $15. Stocklands was under buy conditions, but it's also rolled over, so you can see there the sell signal, so you will not find that in our model portfolio. Insurance Australia under sell conditions, which has been the prevailing signal there as we've seen this downtrend sort of manifest over the last number of years. We've seen the investment banks downgrade all the insurance stocks, so you've seen sort of fairly heavy selling across Suncorp, Insurance Australia Group, QBE, etc. over recent weeks, and that's off the back of that investment bank downgrading the outlook there. BHP under sell conditions. It had been under buy, it's been in our model portfolio for quite some time. Under sell conditions at the moment, and just mindful of the overhead resistance there at around $55. Suncorp, as I mentioned earlier there, that's under sell conditions. We've seen that move lower below that resistance level. Lendlease, we've seen this undersell. Lendlease may be an example, and we'll keep a close eye on this over the next few days, where we may see this shift back to algorithm buy conditions, which I'd be quite pleased to see that. I think the longer term fundamental story there for Lendlease could allow for a long-term recovery play, but we'll just be patient and wait for that algorithm buy signal there on Lendlease. Cochlear under sell conditions, resistance there at around that 230, 240 level. Westpac under sell with resistance around 25. Medibank under sell with resistance around 325. Fortescue under sell conditions with resistance around that $22 level. Rio under sell with resistance certainly up at around 130 there at the moment for Rio. Aristocrat under sell conditions. Coles under sell with a resistance at around 19. Woolworths, so you can see there it shifted from buy conditions back there into sell conditions, and resistance in Woolworths around that $40 level. Brambles under sell conditions, resistance at around that $11 to $12 range. CSL's been under sell conditions for a while now, so we'll wait and see for that. Just be patient and wait for that to shift back to buy signal. Obviously, it's a great company. QBE under sell conditions, so we're not doing there at the moment. Amcor under sell. I'm skipping through a couple of these sells, and obviously the focus for tonight will be on the buy signals. And here we are. So now what's happened is we've gone from the stocks that are under sell conditions from the top 50 index into the stocks that are under buy conditions. So what's changed here on the charts is you can see that we now have support lines in place rather than the resistance. In the case of Qantas, this is in the model portfolio. My expectations are for Qantas, at least in the short term, for mainly moves sideways. Obviously international travel and travel in general's opening back up, but they're also battling with slightly higher fuel prices. But there is pricing power for them to increase ticket costs accordingly. So it'll be, I think all in all, Qantas can sort of maintain that $5 support line and trade sideways, but ultimately likely to break higher from that consolidation. Sonic Healthcare, this is a buying opportunity, so add this one to your notepad, sort of somewhere between this $32 to $34 level. Look for the short-term momentum indicators to turn higher. That support range that I've indicated there, would expect buying interest to rebuild at around that level. The company has a $500 million share buyback that's occurring, which should help to underpin that. So I'll certainly be drawing your attention to that on the blog. So again, whether you're a trader or an investor, an investor might sort of accumulate the shares within that range. A trader might be a little more focused on these momentum indicators turning higher, and we'll cover both of that in the commentary on the blog and in future week recordings. So Sonic we like in the model portfolio. Northern Star, the gold stocks are now in the model portfolio. So we've seen Northern Star and Newcrest both added into the model portfolio. Treasury Wines under buy conditions, expecting earnings growth somewhere around 8% per annum over the next 12 months. So looking for that to trade higher. It's in support range where it is at the moment. ASX, likely to possibly get down and test sort of this support range that I've indicated here. Volumes for the market are likely to be a little bit softer than what they have been. That may sort of weigh on sentiment, and I'd be happy to be a buyer of ASX somewhere around that $76, $77 level there. Zero, this is oversold down here at around this $75 to $85 range. So if you don't own that, you can start to think about accumulating that for your investment portfolio. We hold it in the top 50 model. Dexus, the advice to our subscribers and our account holders is that we want exposure to the real estate investment trust sector, but we're doing that through the SLF, which is a managed fund, and then we have our sort of growth opportunity, which is Goodman Group, and sitting sort of further down the list from Goodman Group, the next alternative there would be GPT to round out a portfolio, but certainly SLF and Goodman Group. But Dexus under buy conditions, and you'll find that in the model portfolio. James Hardie approaching oversold levels here. So James Hardie and BlueScope Steel are both attractive businesses. They obviously have exposure to the housing market globally. We're seeing that slow down a little, and that's reflected in the weaker share prices. We're getting down to levels in these names where a buying opportunity is starting to present. So in the case of James Hardie, you can see there the range that I've indicated on the chart. If you want to be patient, what you're waiting for is a reversal and a move back above the moving average, the stochastic, to reverse and trend higher. If you're an investor, you might just create a range there where you're happy to accumulate the stock, but again, via the blog, I'll cover both scenarios for both traders and investors on James Hardie, but opportunity there, and you should make a note of that one on your notepad. Newcrest covered under buy conditions. Centre Group, so largely bumping sideways there, Centre Group, but under buy conditions. BlueScope Steel, so this is a fairly new addition to the top 50 portfolio. And by that, what I mean is it's recently switched from sell conditions into buy. You've got support there at around that $17.50. The stock's rallied roughly $1 since being added to the portfolio. The support line here that you're going to focus on is that sort of $17.30 level there. You want to see BlueScope hold above that. Obviously, if you're a trader, you might be thinking of running a stop loss, and part of that strategy, let's use this as an example. If I'm talking to clients from a shorter term trading standpoint, I'll reference this sort of first test, first fail, which is the rally higher, the pullback. You're in the trade, but this structure here of having this extra level of support that I'm just putting into place allows you to put your stop loss in a little bit tighter under that level. So that's your trader setup that we focus on, and we have sort of education and mentoring that's available to our members that if you're interested, is more trading than investing. We've certainly got the mentoring there to provide you the strategies to do that. So BlueScope Steel in the model portfolio, Mirvac in the model portfolio, ANZ in the model portfolio. Generally, the commentary around the banks have been that we're mindful that there's not much in the way of top line revenue growth, so we think the banks at best really bump along sideways. South 32's been one of the better performing stocks in the model, and if we just look at the history of it here, it's switched from sell conditions into buy conditions there at around $2.78. We had a subsequent signal here at around $3.40. It's continued to move higher. What we're now looking for is probably a pullback in the price and maybe another algorithm buy signal. If we get sort of a more significant rollover, we'll see that shift into sell conditions, and that'll be removed from the model portfolio. But for the time being, clearly the structure here is bullish, higher highs, higher lows, price action above the moving average, and momentum carrying that higher for the moment. Telstra bumping along on support, around that 380 level there is support. In the model portfolio, and arguably, if you're running an investment portfolio looking for safe yield, Telstra is certainly a consideration there at the moment. GPT Group, as I mentioned, it's in the model portfolio, shifted from sell into buy conditions here at around $4.25. Now we have this higher low formation here at around $4.50. Macquarie Group shifted from sell conditions into buy here at around 150, and you got a new higher low formation there at around 172. The investment banking side, we've seen warnings from JP Morgan where the investment banking income has been very slow over the last quarter, and we may see something similar from Macquarie. Albeit that increasingly a lot of their revenue is coming from a recurring asset management fee, but still investment banking is likely to be soft for Macquarie. So I think a net scenario is we're likely to see Macquarie really keep tracking at around that 175 level sideways, I suspect. NAB, soft revenue growth, so not too much in the way of exciting forecasts there for the domestic banks, but just highlighting that it shifted from sell conditions into buy, and you'll find that in our top 50 model. As is the case with CBA, shifted from sell into buy. It's been in the model there since around $81. ResMed, one of the better performing stocks, been in the model for a substantial amount of time, shifted from sell signals into buy here at around $14, and then these subsequent signals have done a good job. The pullback that we see here at the moment in ResMed, if you don't own ResMed, the correction that we've seen from 40 back down to this sort of $28-$29 range is a buying opportunity. I've created this range here for you to have a think about, which is really support there at around that $27, sort of somewhere around 25 would be a middle of that range, and a pullback to 24 would be the bottom. So if you don't own it, accumulating ResMed within that range is something that I would suggest that you look at, and you might make a note of that on your notepad. Ramsey Healthcare under a takeover offer there at around $88. We're waiting to see whether that materialises, but the history here on Ramsey, this was a stock that I'd highlighted a number of times on the blog, so all these yellow markers here are a reference to times that I've posted on the blog about buying Ramsey Healthcare. We've now traded out of this. We've taken the profit, which we did up at around $81, $82 from memory. And we'll just simply revisit it subject to what ends up happening with the finalisation of that takeover offer. Goodman Group, there is a similar stock to Ramsey in America that I feel very strongly about. One of the better investment opportunities in the US market, and there's many very attractive opportunities in the US market at the moment after the heavy selling that we've had there. But as a subscriber or a trial account holder, if you have an interest in US stocks, please reach out to me, and I'm happy to share with you my thoughts on that medical company in the US, which offers great upside, with growth at a reasonable price. So downside risk is limited, and upside is significant. So again, don't hesitate to give me a call, and happy to talk to you about some of those opportunities in the US market. So Goodman Group, we like this. We've seen the company come out, reaffirm earnings growth. We've gone from around 14-15% earnings growth now to growth over 20%, 21 to 23%. I think if we take a more moderate view on that and just say over the medium term, the company delivers somewhere around sort of 12 to 15% earnings growth, the company will continue to grow into its fairly high valuation at the moment. What we are seeing is someone like GPT start to reposition their portfolio to capture more of this faster growth e-commerce fulfillment center type product that Goodman specialises in. But the correction in Goodman from 27 down to $20 creates a buying opportunity, and you want to think about adding that to your portfolio. Endeavour, as I mentioned earlier, this is a new addition. The correction here from $8 down to $7, we see that added into the model portfolio. Wesfarmers, the correction from from 67 down to 47, we add that in. Attracted to Wesfarmers on a longer term basis, the diversification that those business segments offer, the near 4% yield, it's attractive, and you should be adding that into your portfolio in a sensible allocation, but now's the time where you could start to add Wesfarmers in if you don't already own it. Computershare, one of the better performing stocks, switched from sell conditions into buy. And we've seen a small correction here. I wouldn't chase this stock at the moment, so you just want to be patient, wait for the next algorithm buy signal, but certainly been one of the better performing stocks in the model portfolio. APA Group switched from sell conditions there into buy at 9.30, now pushing 11.40. Origin Energy's done extremely well from sell conditions into buy. We've obviously seen this correction in the share prices. They've withdrawn their earnings guidance, but both Origin and Woodside are in the model portfolio and have been great performers for the moment. Origin, and is likely to, despite them withdrawing their earnings guidance, the structure here, the momentum's positive. We're likely to probably see another algorithm buy signal on any weakness in Origin, and I expect that to stay in the portfolio. Woodside Petroleum, the switch from sell conditions there into buy. This was the higher low formation that I was drawing your attention to on the blog. The stock's now rallied about 10%. Looks to me that we're going to get up and retest this high given the strong oil prices at the moment. So around $34 to $35 seems more than achievable there for Woodside. And Block, which I'm not doing there at the moment, Lottery Corporations, which is part of the spin-off or part of the separation of Tabcorp, and there we are, we get through to the stocks that are now under sell. So just to finish off this evening, just as a reminder, so this is what we looked at. We've clicked on model portfolio. We've gone through the stocks that I shared with you, the stocks that were under sell conditions at the beginning, but the main focus was to review the companies that are in the top 50 portfolio that are under buy conditions, and hopefully you've made a note on the notepad of stocks that are actionable at the moment, both from an investment standpoint and from a trading perspective. As a non-member that's joining us for the webinar, I encourage you to jump onto our website. This is the home page. If you click on free trial, it'll take you through to this create account, and you can create a free trial. If you've maybe had one in the past, you can reactivate an old account. So I encourage you to take advantage of the free trial. Whilst you're on the trial, I'll share with you some of the new technology developments that we've had. There's a number of exchange traded funds that I'll talk to you about as an overall investment strategy. And if you'd like to cover anything on those US stocks, I'm also happy to point out to you the stocks that we're taking action on in America. So part of your 14-day free trial is that I'm available to help you out with setting up the technology and spending time with you on the investment strategy. So I look forward to talking with you. And again, just as a reminder, jump on the website, fill in those details, and I look forward to working with you over the free trial period. So thank you for listening in.